10 facts you should know about the real estate market. The real estate market can be one of the best investments for you that yield great returns with minimal effort, but it can be hard to know where to start. After all, there are so many factors at play that it can be difficult to distinguish between what is real and what isn't. Welcome back to our channel. Whether you've been thinking about buying a home or are just curious, we have curated a list of 10 facts about real estate that you should know. Number 10. Real estate is the best investment for most people. The average annual return on real estate is 5 to 6%, which means that if you invest $100 and hold it for 10 years, your money will be worth about $215, assuming 8% growth. That's not a bad return. How does this happen? Well, the housing market has been artificially inflated due to low interest rates and cheap mortgages that allow homeownership to become affordable again after several years of increasing prices and decreasing availability of homes at affordable prices. This makes it seem like real estate is an easy way to make money when in fact it isn't as easy as it looks, because there's no guarantee that these booms will continue indefinitely. They could just as easily turn into busts down the road, which would mean losing all those gains made during previous booms when prices were high due largely because demand exceeded supply. Number 9. Real estate investors are flocking to low-tax states like Florida. As the real estate market has recovered and continues to grow, investors are flocking to low-tax states like Florida. Florida has no income tax, which means that if you're looking for a good deal on a home or something else, it's worth your time to look into this state. You can also save on taxes by buying an investment property in Florida instead of another one elsewhere in the country where there may be high capital gains taxes or sales taxes. As we just mentioned, this is a great place for people who want to buy their first home but don't want all those expenses associated with owning a new house. Plus, there are so many other benefits. No property transfer tax, no personal property tax, no capital gains tax, etc. Number 8. Commercial real estate plays by different rules than its residential counterpart. While residential property can be purchased and sold in 6 months, commercial properties are generally more complicated. The time horizon for buying and selling a commercial building is longer than for residential real estate, 12 to 15 years. This means that the price of a building may not change much of a time unless there is some major news event or development taking place at your property. An important factor when considering whether to buy or sell an existing property. Liquidity is also an issue for commercial real estate investors. Many factors affect how liquid an asset becomes over time, such as whether banks like it enough to lend money on it, or if other buyers are willing to pay above fair value for their share of ownership rights asterisk. Number 7. Owning a home isn't always better than renting one. Owning a home is considered the best option for most people, but it's not always the best option. If you want to live in the same place for a long time and don't want to spend all of your money on maintenance and repairs, renting may be better than owning. Renting can save money over buying. According to a recent study, if you rent an apartment with a monthly rent of $1,000 and invest that amount in a mutual fund earning 10% interest per year, after 30 years you'll have more than $100,000 saved up. Compare this with buying a house at 30% down, around $100,000, plus closing costs, around $25,000, plus property taxes, $2,000. That means paying off your mortgage faster by renting instead. We will also talk about this point in detail in the upcoming topics. Number 6. The 3 most expensive and cheapest states to buy a home in the US. The top 3 most expensive states to buy a home in the US are Hawaii, California, and Washington, D.C. According to Realtor Truvia's 2022 list of 10 biggest premium housing markets in America, the average price of a home in Hawaii is $822,000. California comes in at number 2 with an average cost of $600,000. And Washington, D.C.'s median price per square foot ranges from $1,300 for luxury homes to $1,200 for basic apartments or condominiums, the highest ratio among all 50 states surveyed by Truvia's report asterisk. The top 3 least expensive states to buy a home in the US are West Virginia, Arkansas, and Mississippi. Number 5. Investing in real estate is the best protection against inflation. Owning a rental property can be an excellent inflation hedge. While most assets wilt in the face of inflation, real estate thrives during those times. The reason for this is straightforward. The value of your investment property and the rental income it generates rise in tandem with inflation. Furthermore, the average appreciation rate in the United States has consistently been higher than inflation rates, ensuring that real estate investors, regardless of strategy, will beat price spikes. Number 4. Owning versus renting. On average, it takes about 10 years for home ownership to be more cost-effective than renting. This may seem like a long time, but it's important to remember that the real estate market is always changing and new information can change this estimate. In some parts of the country, like Florida, owning a home can actually be more expensive than renting. But if there's someone else paying your mortgage or rent payments on top of theirs, if they get an interest rate below yours, then buying might end up being less expensive overall than renting, especially if they happen not only have no other debt, but also have room left over after paying their own mortgages, rents, etc., which would help offset any additional costs involved with owning versus renting something nicer than what they live in now, or vice versa. Number 3. There are a lot of tax benefits in real estate investing. In addition to its high profit potential, real estate provides a number of tax advantages. To begin with, income generated by real estate investing is not subject to FICA. The only exception is when this income is paid as a salary via a holding company. There are also advantages to lower capital gains, refinancing, depreciation, and 1031 exchanges. Number 2. The real estate market will continue to grow. This is probably the most important real estate fact on this list for hesitant investors. Despite some bearish resistance a few years ago, projections for the US housing market in 2022 are generally bullish. More importantly, all of the indicators used to forecast market growth are rising. Here's a rundown of the most important ones. The unemployment rate is low, and the job market is expanding. Fewer buyers are taking out interest-only mortgages. The younger generation is eager to make real estate investments. Taxes are relatively low. Economic spending is steadily increasing. Number 1. On average, your purchasing power increases about 1% every year. Purchasing power is the amount of goods and services that you can buy with a given amount of money. It's important to keep track of your purchasing power because it can help you determine whether or not a particular item is worth buying. Your purchasing power increases every year, but why? When inflation occurs, businesses increase their prices to account for inflationary costs. This means that people have less money than they did before when calculating how much something costs. However, since prices are now higher than before and your income hasn't changed or even increased, then this means that we gain some extra money each year and therefore more purchasing power. And same is the case with real estate, but don't take this information and delay your real estate goals, because your real estate investment can grow from 8 to 10% every year, which is way more than your purchasing power. This brings us to the end of this video on 10 facts you should know about real estate investments. Let us know what you think about the video. Do you have some ideas that we didn't share? Please comment down below and we will pin the best comment. Don't forget to subscribe to our channel to watch more amazing finance content like this. With this, we bid you a goodbye. See you in the next video.